अस्सलाम वालेकुम। आज आपकी मुलाकात डॉक्टर तलत अफजा से मनी एंड बैंकिंग के 36th लेक्चर में हो रही है। Try to recall in the previous lecture we were talking about the instruments or the policy tools in the hands of the central bank to control the quantity of money and bring the financial stability in the system. And then we talked about the three policy tools. One was the federal funds rate with the help of the open market operation, then discount rate through the borrowing of the commercial banks from the central bank, and finally we were talking about the reserve requirement. Since the time did not permit us, so we were not able to finish all of them. So before I start today's lecture, I would like to go back, build up the background, and then we'll come to our today's topic and complete, inshallah, our today's topic. So just as a revision and the background, we were talking about the role of the central bank. We said the central bank basically is performing two different roles. One is as the government's bank and the other is as the banker's bank. In the performance of its function for the government, the central bank undertakes all those activities which a commercial bank undertakes for its clients. But there is one big difference, and that is the central bank has the monopoly power on printing of money. And the central bank can also change the size and the composition of its balance sheet. Whereas the commercial banks, they cannot do that. They do provide us the deposit services, the payment system stabilization, and they keep an accounting record of our account. The same functions are performed by the central bank for the government, but over and above, it also prints the money and it can also change the reserve of the banking system. Having these monopoly power and the manipulation of the reserve requirement, the central bank is also assigned with certain objectives. The objectives are set forth by the policy makers, and the central bank tries to achieve those objectives. The first objective for a central bank is to achieve low and stable inflation. Number two, high and stable growth with the high level of employment. Then the stable financial system, stable interest rate, and the stable foreign exchange rate. So these are the objectives which are put forward by the policy makers, which the central bank tries to achieve. अब उसके साथ साथ there are certain prerequisites which a modern bank should have in order to conduct its business smoothly. In that, we talked about the autonomy of the bank. The bank should be independent of any political pressure. No external influence should be able to change the budget or the decision of the central bank. Then we say the central bank should be transparent, should publish the financial statements, make them public, so the stakeholders should be knowing whatever is going on. And then for the stability of the financial system, there is one prerequisite. For a modern central bank, it should have good communication link with the financial system participants. So with these prerequisites and the objectives to be achieved by the central bank, we were talking about the role of the central bank in the money creation. So in previous lecture, we talked about a very simple scenario. We said, let's assume there is only reserve requirement which is given by the policy makers to the commercial banks. There is no excess reserve, that the banks, they do not keep excess reserve. And thirdly, we said the currency withdrawals are also zero. So once a loan has been extended by a bank to a party, the party does not withdraw any cash. Rather, they deposit all the money back into the banking system. In other words, there is no leakage from the system, no currency withdrawal. So with these stringent conditions, we said the deposit creation will be that we have the change in deposit is equal to the required reserve ratio times the change in reserves. Or we can also have alternatively the change in reserve is equal to required reserve times the change in deposits. Overall, we talk about the deposit multiplier, that $1 deposit in a banking system will ultimately increase the total deposit of the system by how much? This is what we get through the use of the deposit multiplier. So in this simple word, we said our deposit multiplier is equal to 1 over the required reserve ratio, 1 over RD. And since there was no leakage from the system, no cash withdrawals by the non-bank public, then we should also have the same money multiplier. And we say the quantity of money, capital letter M, is equal to lowercase letter m, which is the money multiplier, times the monetary base. Now our monetary base basically consists of the currency and the reserves of the bank. Given a certain level of monetary base, our money multiplier in this simple word is also the deposit multiplier, which is 1 over the RD. So money multiplier times the MB is the quantity of money. Later on, we relax the assumption because we want you to come closer to the real life situation. Practically speaking, when we look at the banking systems, bank keep two different categories of reserve, which means that we can subdivide the total reserves of the banks into two components. Yani total reserve R is equal to number 1, required reserve RR, which is the legal requirement, which every bank has to fulfill, plus ER, the excess reserve, which banks themselves decide to keep in order to meet certain emergency withdrawals. So the reserves can be decomposed into required reserve and the excess reserves. Then we can also talk about the excess reserve ratio. Now the excess reserve ratio, we simply say, is equal to excess reserve divided by the deposit. That is our excess reserve ratio. Similarly, we also see whenever we take a loan from a bank, we do not deposit the entire amount back into a bank. Rather, we have taken a loan to meet certain requirements, to undertake certain transactions. So to make it more realistic, we also talk about the currency withdrawals by the non-bank public. Therefore, currency to deposit ratio. Now, the people, they would like to hold currency and they will not deposit all the money back into the banking system. And then we define that ratio as C over D. Having done that, now when we talk about the deposit multiplier as well as the money multiplier, our expression changes. So if we take, let's suppose, 10% as the required reserve ratio, then in a very simple word, with zero excess reserve and no withdrawals of the currency or the cash from the system, our multiplier is equal to 1 over 0.10 is equal to 10. But when we relax these stringent assumptions, what we see here, that our deposit multiplier is equal to 1 over cash withdrawal ratio, C over D, plus required reserve ratio, plus the excess reserve ratio. Now let's assume now that if the required reserve ratio remains 10%, but 5% is the excess reserve ratio, and 5% let's assume is the cash withdrawals. Now what we will have? Our deposit multiplier now will be equal to 1 over 0.05 plus 0.10 plus 0.05. So we'll have 1 over 0.2. Now our multiplier has been reduced from 10 to how much now? We have 1 over 0.2, 5. So the introduction of the positive excess reserve as well as the cash withdrawals by the non-bank public or the currency holdings of the non-bank public, the size of the multiplier decreases. With the currency holdings of the non-bank public, when we try to look at the money multiplier, now the deposit multiplier and the money multiplier, they were the same when we were talking about zero excess reserve, and C over D as well 0, means currency holding of the general public also 0. With the positive currency holdings as well as the excess reserve, now when we calculate the money multiplier, our money multiplier is different from our deposit multiplier. And what is the expression for the money multiplier? The money multiplier is equal to 1 plus now the C over D ratio, currency to deposit ratio. In the denominator, we have the same three ratios, the currency to deposit ratio, plus the required reserve ratio RD, and plus ER over D, which is the excess reserve ratio. So overall, if we continue with our example of 10% required reserve, 5% excess reserve ratio, 5% currency to deposit ratio, then our money multiplier will be 1 plus 0.05 divided by the same 0.20. So in other words, the size of our money multiplier will be bit larger than the size of the deposit multiplier. Because deposit multiplier mein we are taking 1 over 0.20. But here in the money multiplier, we are taking 1 over 1 plus 0.05, which is 1.05 over 0.20. Now, after looking at this, the multipliers, we try to look at the relationship between the quantity of money and the monetary base. And we said the relationship between the quantity of money and the monetary base is established with the help of the money multiplier. So we use capital letter M for the quantity of money, capital letter MB for the monetary base, and the lowercase letter m for the money multiplier. Then our M is equal to small letter m money multiplier times the MB. And then we looked at the individual components of the money multiplier as well as the, of course, the monetary base and its relation to the quantity of money. The monetary base and the quantity of money, they are directly related. If there will be an increase in the monetary base, it will lead towards an increase in the quantity of money. And the monetary base is currency plus the reserves. Then our required reserve ratio. The required reserve ratio and the money quantity of money, they were inversely related. As the required reserve ratio will increase, the banks will hold more in reserves because legal requirement they have to fulfill. And therefore, the quantity of money will decrease. Excess reserve. If the banks, they like to hold more excess reserve, then less will be available to lend out. As a result, quantity of money will decrease. Similarly, when we have C over D ratio, currency to deposit ratio. In the money multiplier, we have the currency to deposit ratio in our numerator as well as in our denominator, C over D. So what is the ultimate relationship? That remains unclear if we look at the formula. But logically speaking, अगर हम इसको गौर से देखें, तो currency basically is a leakage out of that system, banking system. Therefore, we should say, and we may say, that the currency to deposit ratio and the quantity of money, they are also negatively related. So once we have analyzed these components and this relationship, then we can see how the federal fund, market or the rate or the other policy instruments are used to stabilize the financial system. With this basic background of the money multiplier and the deposit multiplier, we came back to our discussion. And the topic under discussion was that the central bank is assigned with certain objectives. And these objectives are set forth by the policy makers. And there we have stable low inflation, high and stable growth, higher employment, stable financial system. And then we have the stable exchange rate as well as the stable interest rates. So there is a longer list of objectives than the tools available in the hands of the central bank to achieve these objectives. So what are the basic tools available in the toolbox of the central bank? There we said there are three basic tools available with the central bank to achieve these objectives. The first tool was the federal fund rate. And this federal funds rate, of course, the central bank can only fix a target for the federal funds rate. And they tried to manipulate the federal fund rate through the open market operation. अब इसमें यह है कि what basically is the federal fund rate? It's the interbank borrowing and lending. कि whenever banks are in trouble, In trouble means they have certain liquidity problem. They have one option available. They can help one another through lending and borrowing in the interbank market. And this borrowing and lending of the banks is done in the federal fund market. Now the actual federal funds rate is determined through the demand and supply in the market, whereas the target federal fund rate is decided by the central bank. The efforts of the central banks are always directed towards bringing the target federal funds rate close to the actual federal fund rate, or bringing the actual federal fund rate close to the target federal funds rate. Now, how the central bank can achieve that? Through the open market operation. What the bank does is, the open market operation is purchase and sale of securities. पहले भी हमने डिस्कस किया था कि जब गवर्नमेंट जो है, गवर्नमेंट मीन्स सेंट्रल बैंक, when the central bank purchases the securities, government securities, what happens? The payment is made by increasing the reserve accounts of the bank from whom the central bank has purchased the securities. तो उनके reserves बढ़ जाते हैं. और central bank has the ability to change the reserves. और रिजर्व की बेसिस पे जो है बैंक के डिपॉजिट्स भी चेंज होते हैं, और ऑफ कोर्स उनके बाकी सारी एक्टिविटीज लैंडिंग एंड बोरोइंग जो है वो भी डिपेंड करती है. व्हाट दिस सेंट्रल बैंक डज इज कि थ्रू द ओपन मार्केट ऑपरेशन दे ट्राई टू इंक्रीज और डिक्रीज द रिजर्व्स ऑफ द कमर्शियल बैंक, एंड थ्रू दैट दे ट्राई टू इन्फ्लुएंस द एक्चुअल फेडरल फंड्स रेट. As this actual federal fund rate comes closer to the target federal fund rate, then that policy objective has been achieved. In this graph here, we have the market for the bank reserves. We have taken the quantity of reserves on the x-axis, and we have taken the market federal funds rate on the y-axis. We look at the horizontal line here, the target rate. This target rate basically is the federal funds target rate decided by the central bank. Now, once the central bank has decided this particular federal fund rate, we can say the supply of the reserve becomes horizontal, because here we are talking about the market for reserves. So what we have here is the reserve supply is horizontal. And then we look at the reserve demand. Supply of the reserves comes from the central bank, which it has already fixed at the federal fund rate level, which is the target level. Now the demand comes from the commercial banks. अब आपको याद होगा माइक्रो इकोनॉमिक्स में we talk about the demand curve. अब what basically is the law of demand? That the price and the quantity demanded, they are inversely related. अब अगर हम बैंक्स को देखें और उनकी डिमांड फॉर रिजर्व जो है, that again is reflected with a negatively sloped reserve demand curve. At a higher level of federal funds rate, the quantity of reserve of course will be low. Quantity demanded by the bank and that quantity demanded is of the reserves will be low, because federal funds rate is the price. So if that is high, then the quantity demanded for reserve will be low. So at a higher rate we have less quantity demanded at a lower rate we have more quantity demanded. Overall, if we look at this graph here, what we have, where the reserve supply is exactly equal to the reserve demand, then we see that this is the equilibrium, and that is the target which the central bank tries to achieve. And how the central bank does that, जैसे कि पहले कहा कि open market operation, which is the purchase and sale of the security के through, they try to control the federal funds rate. Then comes the discount rate. हमने पहले भी कहा था कि हमारा सेंट्रल बैंक जो है is also the banker's bank. It's responsible for the smooth functioning of the financial system. And in order to keep this functioning smooth, it performs a service for the other banks, which is known as lender of the last resort. That whenever a bank has liquidity problem, the bank can go to the central bank for borrowing the funds. So discount lending, the lender of last resort, and the crisis management. If you look at the overall central bank's activity, so lender of the last resort is not a day-to-day activity. The frequency of this is not that much. However, such lending is the central bank's primary tool for ensuring short-term financial stability. कि ऑब्जेक्टिव में से एक ऑब्जेक्टिव जो था सेंट्रल बैंक का, ये था स्टेबल फाइनेंशियल सिस्टम. अब ये लेंडर ऑफ द लास्ट रिसोर्ट और lending to the commercial bank is the tool through which the central bank tries to achieve the stability. Because if it looks at the scenario in which bank is solvent but is temporarily illiquid. By solvency, what do we mean? That the bank's assets are more than its liabilities. Or in other words, bank has positive net worth. तो इस सूरत हाल में the central bank would like to lend out to this bank to avoid any panic and bank run. So lender of the last resort is a tool which a central bank can use to bring stability in the financial system. अब इस lending में जब वो lend करता है central bank to the commercial banks, they ask for a collateral. क्योंकि ये collateralized loan होता है central bank का for the commercial banks. तो collateral क्या use करते हैं commercial bank? The government securities they have. However, such lending is the central bank's primary tool for ensuring short-term financial stability, for eliminating bank panics, and preventing the sudden collapse of institutions that are experiencing financial difficulties. ये सारी की सारी activity जो है that central bank is undertaking to have a stable financial system. Moreover, the central bank is the lender of the last resort, making loans to banks when no one else can or will. But a bank must show that it is sound to get a loan in a crisis. अब जब central bank जो है lend करता है to this bank as a lender of the last resort, एक तरफ तो वो financial system की stability वाला objective achieve करता है, उसके साथ साथ बैंक जो है interest rate stability वाला objective भी इसी टूल को यूज करके, डिस्काउंट लैंडिंग को ही यूज करके सेंट्रल बैंक कैन अचीव. अब सेंट्रल बैंक जो है 3 डिफरेंट तरह के लोन्स जो है कमर्शियल बैंक्स को एक्सटेंड करता है. अब वो 3 डिफरेंट तरह के लोन्स क्या है? वन इज द प्राइमरी क्रेडिट, देन इज द सेकेंडरी क्रेडिट, एंड फाइनली द सीजनल क्रेडिट. Now, the primary credit basically is the overnight loan given by the central bank to the commercial banks, और वो commercial bank जो temporarily जो है illiquid थे. For example, there is a commercial bank. They have given a loan to a party and they were expecting to get the loan repayment maybe tomorrow. But today, a party comes with a large demand for the withdrawal of the cash. Tomorrow, of course, the money will be available to the commercial bank. लेकिन आज इस वक्त बैंक की लिक्विडिटी इतनी नहीं है to meet that demand. Bank has two options available. One is to go and borrow from the other banks, which is borrowing from the Federal's fund market, or if the other banks, they do not have sufficient liquidity or they do not feel comfortable to lend this bank, then definitely the bank now can go to the lender of the last resort, which of course is the central bank. Now, since the bank was unable to get credit or the loan from the Federal's fund market or the interbank market, it gives a signal about the position of the bank, financial soundness of the bank to the central bank as well, and of course to the other banks as well. And that signal is that the other banks, they do not consider this bank as a financially sound bank to whom they should be extending the loan. So normally, when this bank goes to the federal bank for the overnight loan, the central bank for the overnight loan, what happens there? The central bank extends the loan to the commercial bank, but of course the rate, which is the discount rate, central bank charges from this commercial bank is above the federal funds rate. So this basically is the primary credit extended by the central bank to a commercial bank, and normally this type of loan is extended by the central bank to the commercial banks who are sound, financially sound, but they have the liquidity problem. Now, next is the secondary credit. The secondary credit is available to those financial institutions who are not financially that much sound. They need the short-term loan, but their financial position is not as strong as of another commercial bank who has asked for the primary credit. So the banks may seek secondary credit due to a temporary shortfall in reserves or because they have longer term problem that they need to work out. The bank is asking for a loan, something is wrong which cannot be fixed in a short span of time. Bank needs a cushion so that it can improve the situation. It can take certain measures which can lead towards the improvement of the scenario. Since this type of loan is a bit risky, as the financial soundness of the bank is not as good as of the primary credit जो दूसरे बैंक ने लिया है, so here the rate is even above the primary credit. And then it also gives a wrong signal to the regulator, because we see that the central bank's role is to regulate the banking system. Most of the time, the banks, they avoid going to the central bank. They try to borrow from the interbank market first, from the Federal's fund market first, because they do not want to give the impression to the central bank, which is the regulator, that something wrong is going on. Because if that signal goes to the central bank can put certain restriction on that particular bank in order to avoid a sad scenario in future. Therefore, when we talk about any kind of borrowing of commercial bank from the central bank, that be it a primary credit, be it a secondary credit, the rate is higher than the interbank rate or the federal funds rate. So when we look at the interest rate, the interbank or the federal funds rate is the lowest, then is the interest rate on the primary credit, and then is the interest rate on the secondary credit. Then there is another type of credit which is extended by the central bank to certain specialized banks. For example, the agriculture banks. That the seasonal credit is extended by the central bank to the certain small agriculture bank to take care of the seasonal requirement. So this is the third category of the loan given by the central bank to different banks. Now talking about the tools, the first tool was the federal fund rate, and that bank tries to control through the open market operation. The second was the discount rate, which we just discussed, by giving loan to the commercial banks. And thirdly, we have the reserve requirement. अभी हम डिस्कशन कर रहे थे कि हमारे कमर्शियल बैंक्स को लीगली रिक्वायर्ड रिजर्व जो है एट एवरी पॉइंट इन टाइम रखना पड़ता है in the form of either the vault cash or the reserve with the central bank. अब ये जो reserves हैं, they do not earn any interest. When they do not earn any interest, there is an opportunity cost of keeping the higher level of reserves. और वो opportunity cost क्या है कि अगर बैंक उन funds को lend out करता, उस पे जो इंटरेस्ट अर्न करता, दैट इज द अपॉर्चुनिटी कॉस्ट, द इंटरेस्ट फॉरगॉन. Therefore, on the one hand, bank would like to keep in mind the cost involved or keeping the excess reserve, but on the other hand, they also focus on the benefit. The benefit is that in case a sudden withdrawal request comes, the bank should have sufficient funds available to meet the demand. Now, the central bank can change the reserve requirement. So, one policy tool can be that the central bank can change the reserve requirement, and through that, it can change the reserves, and through the reserves, it can control the quantity of money. So, by adjusting the reserve requirement, the central bank can influence the economic activity because changes in the requirement affect deposit expansion. Because when the reserve requirement will increase, what will happen? Our deposit expansion will shrink. Going back to our very simple example, जिसमें हमने कहा था 1 over the reserve requirement is the deposit multiplier. तो उसी सिंपल एग्जाम्पल को अगर हम लेके चलें कि लेट्स सपोज कि हमारी रिजर्व रिक्वायरमेंट 10% से बढ़ के 15% हो गई या लेट्स से 20% हो गई. जब हमारी रिजर्व रिक्वायरमेंट 10% है तो डिपॉजिट मल्टीप्लायर इज 10, 1 over 0.10. यानी $1 का रिजर्व बढ़ना जो है $10 की डिपॉजिट एक्सपेंशन करेगा. लेकिन अब अगर हमारा रिजर्व रिक्वायरमेंट जो है वो बढ़ जाती है, से 10% से 20% हो जाती है, देन आवर डिपॉजिट मल्टीप्लायर विल बी 1 over 0.205. So $1 increase in the reserves will expand the deposit only by 5. So this is how the deposit expansion is controlled by changing the reserve requirement, and of course the level of economic activity will be influenced by the deposit expansion. Though we can have this type of changes, but this tool is occasionally used. सबसे ज्यादा कम जो है वो रिजर्व रिक्वायरमेंट वाला टूल सेंट्रल बैंक्स इस्तेमाल करते हैं. रीजन बीइंग, इसको यूज करने से इकोनॉमिक एक्टिविटी लेवल जो है और बहुत से दूसरे इकोनॉमिक वेरिएबल्स जो हैं वो अफेक्ट हो जाते हैं. सो अनफॉर्चुनेटली द रिजर्व रिक्वायरमेंट टर्न्स आउट नॉट टू बी वेरी यूजफुल बिकॉज स्मॉल चेंजेस इन द रिजर्व रिक्वायरमेंट हैव लार्ज, really too large impacts on the level of deposits. Now what is the role of the reserve requirement then? They are still there. इसको एज ए पॉलिसी टूल सेंट्रल बैंक यूज नहीं करता है क्योंकि डिपॉजिट के ऊपर अभी हमने जैसे एग्जांपल ली थी कि 10% से जब 20% हुई तो डिपॉजिट एक्सपेंशन जो है हमारी 5 से कम होके 10 से कम होके 5 रह गई. तो देन व्हाट इज द यूजफुलनेस ऑफ द reserve requirement or how it is being used today? So today the reserve requirement exists primarily to stabilize the demand for reserves and help the central bank to maintain the market federal funds rate close to the target. It is not used as a direct tool of monetary policy. यानी कि ये जो पॉलिसी टूल है ये डायरेक्ट मॉनेटरी पॉलिसी को कंडक्ट करने के लिए इस्तेमाल नहीं होता, रादर इसको हम यूज करते हैं लेवल ऑफ रिजर्व को चेंज करके अपना फेडरल फंड्स को स्टेबलाइज करने के लिए. पहले हमने ये कहा था कि फेडरल फंड्स रेट को सेंट्रल बैंक जो है इन्फ्लुएंस करता है थ्रू द ओपन मार्केट ऑपरेशन. सो दैट इज वन वे. अनदर ऑप्शन इज थ्रू द चेंज इन द रिजर्व रिक्वायरमेंट. अगेन द सेंट्रल बैंक कैन चेंज द रिजर्व्स, level of reserve, and therefore the interbank or the federal fund rate. So now we can summarize these three policy tools in the hands of the central bank to achieve different objectives. And that we have done on this particular slide. The central bank's monetary policy toolbox. The tool of and then the monetary policy. The tool of target federal funds rate. First of all, what is it? The interest rate charged on overnight loans between bank is our federal funds rate. And how is it controlled? Supply of reserves adjusted through open market operations to meet expected demand at the target rate. And what is its impact? Changes interest rates throughout the economy. कि टारगेट फेडरल फंड रेट क्या है? इंटरबैंक रेट है, उसको सेंट्रल बैंक थ्रू ओपन मार्केट ऑपरेशन इन्फ्लुएंस करता है. फेडरल फंड्स रेट मार्केट के को टारगेट फेडरल फंड्स रेट के करीब लाने की कोशिश करता है और उसकी वजह से थ्रू आउट इंटरेस्ट रेट जो है इकोनॉमी में वो चेंज हो जाता है. सो बेसिकली इट इज यूज एज द इंटरेस्ट स्टेबलाइजेशन टूल. सेकेंडली, डिस्काउंट रेट. व्हाट इज इट? Interest rate charged by the central bank on loans to commercial banks. How is it controlled? Set as a premium over the target federal funds rate. जैसे मैंने पहले कहा कि इंटरबैंक रेट और द फेडरल फंड्स रेट सबसे कम होता है और उसके ऊपर कुछ प्रीमियम जो है वो सेंट्रल बैंक चार्ज करता है. What is its impact? It provides short-term liquidity to banks in times of crisis and aids in controlling the federal funds rate. And finally, reserve requirement. What is it? Fraction of deposit that banks must keep either on deposit at the central bank or as cash in their vaults. How is it controlled? Set by the central bank within a legally imposed range. And what is its impact? Stabilizes the demand for reserves. तो पहले दो पॉलिसी टूल्स जो हैं they are used for the stabilization of the interest rate and finally reserve requirement जो है वो stability लाती है आपकी reserves of the banks. Now let's try to link the tools to the objective. अभी हमने कहा कि ये तीन हमारे पॉलिसी टूल्स हैं और अब हम ये देखना चाहते हैं कि किस तरह हमारे जो सेंट्रल बैंक के ऑब्जेक्टिव हैं उनका और इन पॉलिसी टूल्स का आपस में किस तरह से लिंकेज हो सकता है. Now, desirable feature of a policy instrument, easily observable by everyone, controllable and quickly changed, tightly linked to the policy maker's objective. कि अभी हमने जो डिस्कशन की है, we were talking about certain instrument policy tools. लेकिन एक अच्छे पॉलिसी टूल की क्या क्या कैरेक्टरिस्टिक्स होनी चाहिए, that we have listed down. First of all, we said easily observable, यानी कि उसको हम मेजर कर सके, उसके बारे में हम इंफॉर्मेशन कलेक्ट कर सके. Secondly, controllable and quickly changed. Once we can measure it, then we can also control it. और इसको चेंज करने में हमें बहुत ज्यादा टाइम नहीं लगना चाहिए, बिकॉज इट शुड बी इन अ पोजिशन टू ब्रिंग द डिजायर्ड रिजल्ट. एंड फाइनली वो जो है टाइटली लिंक्ड होना चाहिए हमारे पॉलिसी ऑब्जेक्टिव्स के साथ. सो दीज रिक्वायरमेंट्स लीव पॉलिसी मेकर्स विद फ्यू चॉइसेस, एंड ओवर द इयर्स सेंट्रल बैंक्स हैव स्विच्ड बिटवीन कंट्रोलिंग द क्वांटिटी एंड कंट्रोलिंग द प्राइस. कि वो ओवरऑल जब हम देखते हैं कि पॉलिसी मेकर्स जो हैं, जब देखते हैं इंस्ट्रूमेंट्स की, टूल्स की क्या डिजायरेबल कैरेक्टरिस्टिक्स हैं, तो उसके मुताबिक, उन कैरेक्टरिस्टिक्स की लाइट के मुताबिक दे हैव चेंज्ड, दे हैव स्विच्ड बिटवीन द क्वांटिटी टू द प्राइसेस. फॉर दैट लेट्स सी कि द मार्केट फॉर बैंक रिजर्व्स व्हेन द सेंट्रल बैंक टारगेट्स द क्वांटिटी ऑफ रिजर्व्स. Now here we have taken the quantity of reserves on the x-axis and we have taken the market federal funds rate on the y-axis. When the federal bank or the central bank targets the quantity of reserve, then what do we get? The target quantity of the reserve gives us a vertical supply curve because this is the target. And then we look at the demand for reserves. Now the demand for reserve basically comes from the banking sector. And the price of the reserves is the federal fund rate. On a higher price, what happens? Less is demanded, lower prices, more is demanded. Therefore, when we look at the demand curve, then the reserve demand curve is downward sloping. यही जो हम पहले भी डिस्कस कर चुके हुए हैं. But overall, when there is a shift, there is an increase in the reserve demand, then what happens? Our demand curve shift towards right, and when there is a decrease in the reserve demand, our demand curve shift towards left. So an increase in reserve demand forces the interest rate to go up because the equilibrium now jumps up. So our market federal fund rate goes up, and a fall in the reserve demand forces the interest rate to go down. Now let's talk about the targets and the instruments. We talked about certain desirable characteristics of the instrument. Now here we are saying कि operating instrument refer to the actual tools of policy, instruments that central bank controls directly. Then we have intermediate target. They refer to the instrument that are not directly under the control of the central bank, but they lie between their policy making tools and their objective. Overall, इंस्ट्रूमेंट्स वो हैं जो डायरेक्टली पॉलिसी ऑब्जेक्टिव के साथ लिंक्ड है, लेकिन इन बिटवीन हमारे जो इंटरमीडिएट हैं, दे आर द लिंक इन बिटवीन द इंस्ट्रूमेंट्स एंड द पॉलिसी ऑब्जेक्टिव. इसको ज्यादा अच्छी तरह से हम एक्सप्लेन कर सकते हैं विद द हेल्प ऑफ दिस पर्टिकुलर ग्राफ. इंस्ट्रूमेंट्स, टारगेट्स एंड ऑब्जेक्टिव्स. यूजिंग पॉलिसी इंस्ट्रूमेंट टू टारगेट द ऑब्जेक्टिव्स डायरेक्टली. अब हमारे पास ऑपरेटिंग इंस्ट्रूमेंट क्या है? फॉर एग्जाम्पल, इंटरेस्ट रेट एंड द मॉनेटरी बेस आर द ऑपरेटिंग इंस्ट्रूमेंट. डायरेक्टली ये रिलेट करते हैं टू द फाइनल ऑब्जेक्टिव, लो इन्फ्लेशन एंड द हाई ग्रोथ. इन बिटवीन हमारे ये ऑपरेटिंग इंस्ट्रूमेंट इंटरमीडिएट टारगेट्स को भी इन्फ्लुएंस करते हैं. ग्रोथ इन मॉनेटरी एग्रीगेट्स यानी M1, M2, एंड देन M1, M2 जो है हमारे, वो रिलेट करते हैं टू द फाइनल ऑब्जेक्टिव ऑफ लो इन्फ्लेशन एंड हाई ग्रोथ. तो ओवरऑल हम क्या कह रहे हैं कि हमारे पॉलिसी इंस्ट्रूमेंट थ्रू द इंटरमीडिएट टारगेट्स कैन अचीव द ऑब्जेक्टिव, और दोज पॉलिसी इंस्ट्रूमेंट they can directly achieve the policy instrument. If we focus on the direct policy instrument achieving the objective, that is more effective in comparison to the middle. So if you look at the current practice here, most of the central banks right now, they try to use the operating instrument to achieve the objectives. तो ये तो था हमारा आज का लेक्चर. Now before I conclude my today's lecture, let me summarize what we have discussed today. So today we started with the central bank, its role, and what are the tools in the hands of the central bank. We said the central bank has to achieve certain policy objectives which are given to the central bank by the policy makers. Low inflation, high growth, high employment, stable financial system, stable interest rate, and the stable exchange rate. And then we said, what are the tools in the hands of the central bank? In that category, we said, we can talk about 3 tools. One is the federal fund rate, target federal fund rate. And the central bank tries to achieve that through the open market operation. Actual federal fund rate is decided by the market. But the central bank, through the sale and purchase of the securities, tries to influence the reserve, and ultimately the actual federal fund rate and the central bank tries to bring it closer to the target federal fund rate. Then was the second tool, the discount rate. We said the central bank can extend loan to the commercial bank. So it performs the role of the lender of the last resort. It can extend 3 different types of credit to the commercial banks: the primary credit, secondary credit, and the seasonal credit. And through this, the central bank tries to stabilize the level of reserve and also stabilizing the financial system, avoiding the bank run and the panic. And finally, we said the third tool in the hand of the central bank is the reserve requirement. By changing the reserve requirement, it can change the level of the reserve, but this policy tool is not used because changing the reserve requirement brings large changes in the deposit expansion. And that completes our policy tools. And then finally we said direct operating instruments are more effective to achieve the policy objective in comparison to the intermediate target. तो ये तो था हमारा आज का लेक्चर. अब डॉक्टर तलत को इजाजत दीजिए. इंशाल्लाह फिर मुलाकात होगी. अल्लाह हाफिज.